It's 12 o'clock. Welcome to Taking Stock live on YouTube. Don't forget, hit that like, subscribe button and add to the comments. I'm joined by Johnny Boy. You all right, fella?
Good morning. Afternoon, even.
Yeah, afternoon now. Spot on afternoon. And the market's having a little bit of a rally. And that's there's rumors that the Chinese may step in with some stimulus because, of course, they need to do that because they're in big trouble. And there's trillions of dollars of, I don't know what they're doing, but they're looking, and that's why, in fact, if we go straight away to the biggest, the FTSE 100, the rises and fallers here, Ocado, they're the biggest rider. There we are. They benefit from China somehow, but Anglo American, Antofagasta, it's a couple of miners are up there, and let's look at the chart on Ocado. In fact, even
there was some data on grocery price inflation today.
Yes, I've got that. We'll cover that in a bit. Yeah, it's good. It's slow. The inflation is slow. It's not prices are not going down, but they're not rising as fast as they were. By the way, look at that. Even the AIM all share, if you scroll in, it's up a smidge today. But the thing is, up 1%, over 1%. But that is literally 11 after 15 trading days, down 11. Down 11 out of 15, and so a little bit of a bounce. But if we go to the market
out the champagne.
Yeah, let's crack it out there. But the FTSE is doing well, up 1.55%, 1.73 for 250, and just over 1% for the AIM all share. And there's a question here from P6 Jedi. Is today the start of the rally? The rally? I don't think so. I don't think so. I think I do honestly think 2024 is the year of the rally. Maybe after Q2, Q3, I think it'd be a start of a bull market. And that's why I say, for now, conserve a bit of capital, maybe strap in, do your research, and then, fundamental research, then wait for the market, wait for the tide to come in, get your surfboard ready.
But then it kind of goes back to what we were saying the other day, that because there has been, such poor sentiment towards the market as a whole, you're seeing some very sort of good companies caught up in the selling. And we've got one example of that today, which we spoke of, I can't remember now, at the end of last week. YouGuv had some numbers out and boom, there you go. Good company, caught up in the selling, delivered some good numbers because there was nothing really ever fundamentally wrong with it, and off you go. So you run the risk of missing that stuff by sitting on the sidelines.
Yeah, YouGuv. If you look at that, it's quite interesting. Just on the chart, this is why I think momentum is very. I keep saying this. It's basically price action. It's where the money flow is going. But if you look at that level there, exactly where it's rallied to today, that's 820 pretty much. And you see it's dipped down there, just put the head below, bounced back off it there, then really dropped off a cliff, and now it's rallied to it. So that line there is now previous support, is now resistance. Will it get above that? Well, if they keep producing good figures, you'd assume they would. But like I said, it is one of the rises on the page today. Full year results. Let's look at the results quickly. Yeah.
Good.
Yeah. So change 70%, underlying change. Underlying. The word lying is in underlying. Underlying EBITDA. Underlying profit before tax.
I mean, I think
I know what you mean there.
Yeah. I think that's actually fairly transparent.
No, it's fine. I adjusted. I don't mind so much. It's adjusted when they adjust.
Adjusted can be adjusted underlying say the same thing, but sometimes you have to adjust. A top line, an underlying sort of can strip out sort of acquisitive growth that's been bought in. So I think it's a fair enough reporting measure.
I know, but when you adjust things and it's for one-offs, but you tend to think, if you look at any financial report, there's always one-offs. There's always one-offs every single year. So, you think, what are they adjusting for? Sometimes companies are, they'd be loss-making, but they're adjusting, and all of a sudden they adjust the point where they're making a profit. You think, well, are you making a profit or are you adjusting to making a profit? What are you doing? Anyway, top line growth is good. And I do say here, right, I don't know if you saw the IMF report, which is, what's the point of the IMF? Scroll on here, right? I say look for growth in companies, especially in a low growth environment, because the IMF say we're going to be the slowest growing economy, the UK, in the G7, and the highest inflation. But they put this out before the MPC, the Bank of England, paused interest rates, and they've also revised up previous guidance. So we're not that far out. Normally, we're about 1.5 percentage points out on what actually occurs. In July last year, it forecast the UK economy will grow by 3.2% in 2022. It revised it upwards to 4.1% at the start of this year, but official figures show it was actually 4.3%. So if you go from like literally 3.2% to 4.3%, the 1 whole percent, that's a lot.
Yeah,
that one for the economy.
Forecast within 1.5 percentage point of what actually happens. Yeah, that's huge, especially when you're, sort of teetering on the brink of recession. Yeah, precisely. That is a nonsense.
But anyway, what I'm saying is, I do think I'm not talking about just growth for growth's sake, but I mean growth in certain areas. I think if you are in a slow growth environment, there are certain sectors that won't be affected. There are certain sectors that will be massively affected. But if you look for the companies that are sort of almost insulated from that, they've got something special about them. They've got offering maybe technology that's different, maybe a drug that's different. That's what to look for. What are they? Is there a big? It's the same with any business, isn't it? What problem are they addressing? Are they doing it in a different, more efficient, effective way?
Yeah.
And that's what to look of, I think. And when you look for growth, I mean, not just looking for companies that are same as everything else, but okay, but growth, good growth. That's what I'm looking for.
I know a very wise investment analyst, once said that, you should always be on a lookout, and you've just alluded to it, it's problem-solving businesses.
Yeah.
But, you want to make sure that they're solving a problem that translates into sales. There's all sorts of problems out there that don't really need solving, but there are lots that do, lots of things that businesses really need a lot of help with. So solving problems, that translating into revenue, and profit, more importantly, with some kind of barrier to entry would be the other thing I would look for.
Yeah, and especially when you get a change in the environment in some way. Like, for example, I always give the example of going towards a cleaner sort of environment, renewables. Is there companies out there with tech that can address this better than other companies? If there's a seismic shift, and this shift is going to change for the next 10, 20 years. So it's almost like you are sort of surfing with the tide, not against the current, or kind of thing.
I think on the environmental thing, I can't remember where I saw it now, but there was there's some commentary that investment in renewable investments has gone off the boil. So at the moment you are surfing against the tide with something that should be a sort of a secular trend. It's rather odd at the moment.
Yeah, but the thing is, I think part of that was because of the capital required. In fact, Phil says here, what business models do you avoid? Could be a good topic for future video. The reason I mention this is Camellia PLC has diverse agriculture business, years in the business, and can't make a profit. Yeah, I like to look at companies that are not capital intensive, a capital light, pretty much. So that lends itself to tech, maybe software a bit. And once they've got initial investment into the technology they're providing, then the margins can be good. That's always worth looking at margins, gross margins and also operating margins. If they're high, it's an efficient business can scale, So, and like I said, when you get companies that, have to invest in big bits of kit, technology, or bits of factory or machinery, and especially in this environment, if they're not turning a profit and they have to raise money to build more kit, or to build more machinery, it's hard. It's hard going, really is. And it suits companies, in like I said, a couple of years back when interest rates were rock bottom and raising money was easy. But now, efficient companies are always going to be good, aren't they? I mean, any environment, essentially.
I know, mate, you're right. I like capital light companies, definitely. Yeah. And then you generally, as you say, see higher margins, high returns on capital. Yeah. They tend to be software based. As long as that software has run, it's developed in a sensible manner. Businesses that don't really need, that have operational leverage. So, once you have a sort of cost base and an asset base in place, that every, incremental sale is essentially dropping through to the bottom line. So, operational leverage.
Yeah, exactly. And, a lot of software companies like that can pretty much, once you've put the initial development costs into it and you've got the product up and running, essentially copy and paste pretty much, isn't it? Any other, customer comes along, you may do some certain tweaks, but, in fact,
this is why there's, software as a service models, so attractive.
Yeah. Exactly. You've got the software as a service, you've got recurring revenue, plus you've got the efficiency of having a software business. So that's why, those kind of companies are being given, afforded a higher multiple, higher valuation because it's more transparent visibility of the earnings. But
I think what you have to watch out for those companies, though, and maybe not so much at the moment, given we've, gone through a sell-off and everything is adjusted to the new interest rate environment, is that they do have a tendency to get very expensive. They fall in the quality bracket, and quality has had a tendency to get very expensive. So you can buy in at the wrong time.
Yeah. Phil says, I'd personally put car manufacturers in that pile. Too competitive.
Yeah.
No knows who. Yeah. I mean,
100%.
if you're doing something like, a new sort of cutting edge car like Tesla did, EVs, they dominate, first mover advantage in that market. And now that will, I don't know if, people have been saying that's overvalued forever, but I think it'll stay overvalued because it's a market leader. Maybe in 10, 20 years, maybe not. But I mean, they were first mover advantage in that space, weren't they? Okay. Who else? Old Dog, Destiny Pharma. Do you think they'll partner up or be bought out? I'd appreciate your opinion on this. I've no idea. But nice to see, by the way, one of the most read today, the new CEO, Chris Tovey, bought a few shares today. Let me just look at it. One of the most read there. He did 40,000 shares at about 50 pence, so around like 19, 20 grand. So it's nice to get the CEO come in and buy some shares. So there we are. Let's have a look at some of the most read today. In fact, worth looking at today, one of the most followed today, and the chart is looking good. And it's almost, I like Avacta almost have their own marketing department in their shareholders, because they're constantly, pumping out good information, well-researched information on Twitter. But the chart is looking very interesting today, and I'll show you why. So this is green band I put here. Traditionally a bit of congestion here, support resistance on the chart, and now you can see it's at the upper end of that sort of previous support resistance or previous resistance, and this nice sort of rally, slowly a series of higher lows, higher highs. So if it can break through this, I think it's quite bullish. I do, because like I said, it's literally, that is resistance there. They've had some peak outs and gap ups there, and it's come back down. But that level you can see at 1, 2, 3, 4, 5, and even going back to here, really back to sort of 2020, it's been an area of congestion. So if they can break above that, that would be quite good. There's no news out today on the factor, is there?
No.
It's hard to say.
But let me see. There is, because they're presenting at a conference, aren't they? No, it hasn't happened yet. It happens tomorrow. And then a few days after that. So I wondered if anything come out of the conference they're presenting at with some of their secondary drug targets, but no, not yet. Next few days. Yeah.
One of the most read, of course, is this. It was a dream investment if you got in the right time, but it's turned into a nightmare. And that's Bushveld, which of course does vanadium, and vanadium prices are apparently quite low, which I assume is quite good for actually. Yeah, I assume low vanadium prices would be good for Invinity energy systems, because they put those into them. So buying it quite low would be quite good. But like I said, if you look at the drop here, since its high, it's down 93% in 700 days. But yet, look at the rise there. It went up by sort of several thousand.
What date is that? Do you know what? I'm looking at the vanadium pentoxide flake 98% chart at the moment. And,
okay.
Funnily enough,
it's not a chart
it looks just like that.
Oh, does it?
It really does. Big spike towards the end of 2018.
Okay.
Big fall as the price came down, and then sort of hovering along from there.
Oh yeah. But they basically said essentially, market speculating regarding Mr. Cameron Sutter. They were going to request a general meeting, a requisition, and now he's pleased to report that they discussed things, and he decided not to. So it's not really good news. It's a relief. So it did sort of rally a little bit and come back down. But I do think they've got a bit of debt there, and I think I was talking to John Mayer from SP Angel. They've downgraded their outlook for them because of the lithium price. And like I said, if you're in commodity plays, you've got to make sure it is boom bust, isn't it? For commodities, that's the trouble. I mean,
the thing is that they're a processor and producer. If I'm right in thinking, and they've actually managed to deliver a fair old chunk of sales, a fair old chunk of turnover. There was a point 2018 when prices were high, 2018-19, that they delivered some fairly substantial profit at a pre-tax level, but not since then. This is, to me, again, this says something that I've always talked about when it comes to mining, is that you are at the mercy of the price of the underlying commodity.
Well, exactly, the commodity, yes. It is.
And that's exactly what's happened here.
Yeah, and they're doubly hurt because they've taken on a lot of debt when vanadium was high, and then vanadium prices have dropped. and they've got to cover that debt pretty much, and so it's hard work. Here's a bit of commodities, and even one up is West Texas oil, even Brent, after the horrific things going on in the Middle East, like I said, it rallied, then dropped, and it's right. Look, it's trying to get above that sort of $87 level. It can't quite do it, but I mean, that says something when you got a real upset in the Middle East there, a war going on now, and yet it's not rallied. Maybe it's delayed a little bit. I don't know, but you'd expect that to rally a bit, wouldn't you?
You would. I mean, who knows? I mean, the geopolitics are incredibly fragile, but also the sort of economic background is incredibly fragile too. You've got all these forces pulling against one another, sort of, as we've talked about before, demand destruction, but you've also got supply issues and now the geopolitical issues thrown into the mix, which have always sort of been lurking there anyway. It's horrendous. Horrendous. There's another really odd bit of news, rallying on relief, really, is this from Capital Metals. Yeah, I like this one. And this response to reports of a minister's expulsion. And they like this because Sri Lankan Muslim Congress expelled Minister Nasir Ahmed. And they say, Greg Martin says, this is a positive development resulting in the removal from office of the minister we believe to be primarily responsible for illegal interference with our licenses. See, illegally interfering with the license there. Sri Lanka's in a bit of a what are the British company listed in AIM exploration in Sri Lanka? So their economies tricky old place to do business. But I mean, again, just goes back to jurisdiction risk. These are the problems you face. One faces investing in companies that operates in sort of more difficult parts of the world.
Yeah, it's not listed, right? But I heard, I think it was Radio 5. I woke up to Money this morning, listened to that. There's a lady on there, and she's a commodities person, and she was saying that Cornish lithium, they're expected to get 10% of the country's lithium requirements from that mine.
Yeah, quite possible.
That's huge. And I said, well, if you look at jurisdictions, if you can actually, invest in a company mining in your own country when you regard your country being a safe jurisdiction, that's quite good, isn't it? I mean, it's not listed, I think, is it, Cornish Lithium? So
don't think so. No. But what's the other Cornish Metals? I'm not sure they do.
Yeah, Cornish Metals is it? That's not related to that.
No.
Okay.
But yeah, I mean, again, it's this whole sort of rush for critical metals and lots of worries. Within governments about critical metal supply. Metals One is one that we've looked at recently. They're developing prospects in, I'm not sure it's lithium. It might be, I can't remember. But in Scandinavia. So, anything that's sort of close to home, safe jurisdictions, meeting the needs of a big market right on its doorstep. Yeah.
So let's look at Riff. I can never say the name. Riffs off. Do that. I don't say that. Anyway, what's their unique selling point? USP. Just throw in some jargon. Yeah, USP of companies. When I'm I love tiny small companies, and I look for 3 S's essentially. I want to be small. I want to be able to scale. That means the market they're going into is big, commercial, growing, and also they're quite efficient. So I want to be able to scale in that manner, and also something special, of course, that they have that compared to their competitors. Yeah,
well, USP. This is what I think. I've heard in investing terms often referred to as an economic moat. So, a USP doesn't necessarily have to mean a moat. Rather, it doesn't have to mean something unique about a product, although that could be a moat. But it could be some kind of financial advantage as well. Some kind of, just some kind of way the business is set up that makes it hard to compete with.
Yeah, someone said, John, if you invested in Ocado at the same time you invested in BT, you made some money. I don't think so. There's the Ocado price. Look at that there. That's typical, a double top.
That would have made about the same amount of money. In fact, I would have made a lot less, I think.
Yeah, the typical double top there. A high there, lower high pretty much. And then it failed. The lower lows, and the moving averages smooth that out. But so where's BT then? So that's from.
Why don't you remind me of that? It's awful. Did quite well at the beginning. I should have bailed.
Well, let's have a look. They're down 80%, right, in the last.
I'm not down 80%.
1,000 days. Let's look at BT in the last 1,000 days. Let's see if you've got right here. BT.
BT.A.
Yeah. Okay. No. Well, in fact, you haven't done it as badly. I don't think.
No, I haven't. I haven't done well. I can tell you.
That's only down 45%, John. That's going to do a lot better.
Funnily enough, it's actually. I can tell you how much down it is at a high level, and this is just a capital return. It's down since I bought it, 26.3%. Having a good day today, actually, up 3%. But actually, because it pays a reasonably chunky dividend,
yes,
probably only down about 10 or 11, 10 to 15% in portfolio terms.
Yeah.
So I'll take that over Ocado any day of the week.
Yeah. Well, in fact, you know what, John, this may be a bottom here. It's early doors, it's early doors. They've had a fake break rally here. Why was that rallying from? I think most of the companies sort of rallied in there over this period at first last year. But the fact they haven't sort of revisited these lows here, maybe this is a bottom forming, a bottom in the BT.
One can only hope so.
Bottom.
One can only hope so. I haven't sold because I'm waiting. I don't think it's critical infrastructure, and it's a very difficult market. It's been all sorts of shenanigans going on.
What are you waiting for?
It to go up. Got a new chief exec. I wait. I'm holding my breath.
Yeah, exactly. Yeah. Okay. Atlantic Lithium. This is a bit of news here. Again, it's all about government ministers and all that stuff today. It seems like in the thing, but I don't know if it's down on that. But they got approval to divert transmission lines at Iowa. And you was Awoya. But you were saying it's almost like a read across here that they are literally, the government agreeing what they're doing. And they do say that. I mean, listen, the government has invested money in this company, so they wanted to go the way Atlantic Lithium wanted to go.
That's how I read it. That's how I read it. I read it that they have a supportive, mining environmental government authorities behind this project.
Yeah, exactly. So that's what you need, of course, in jurisdictions. It's that bar pretty much. It's struggling. It's back into that range pretty much, which is it needs to get above that, but it is above 50-day moving average. But if you notice there, they do say the big thing they're talking about is the mining license. That's finally.
This is what.
They're a meeting with, and that's what they said there. The company is pleased with the progress of the application and expects the mining license to be granted shortly.
Yeah, I was having a quick peek on Twitter. It does. I feel there's a bit of frustration, which is why the share price is not, where you might expect it to be, just because they want this. Everyone's anticipating this news of the mining license.
Yeah. I mean, I would say there, it's tried to get above that. Almost, a couple of times it's spiked up to what is that? 20. I guess about 27 pence. Yeah, it's a higher high there. You're going to go. It's going to go.
Yeah, so, but I mean, as I say, today's news it's just another bit of news coming out the country, coming out the company and the country. That the interests there seem to be aligned. And it would. If I were a betting man, I'd bet that mining license is almost signed, sealed, and delivered.
Yeah. So one of the things, image scan here, Induction Healthcare.
Induction Healthcare, not image scan.
What are they on about then? INHC. I had them on the podcast years ago. I haven't really looked at them since then.
It's I talk about these sort of companies a lot. Companies that are supporting the NHS's digital transformation. It's been tried many, many times. Well, I said it was tried in a big bang style, over a decade ago, maybe 20 years ago. In fact, it was 20 years ago. And what you now have is sort of lots of companies nibbling away, doing lots of good things, connecting it all up, taking advantage of sort of more modern technology. This is a platform that it basically it's sort of managing appointments, integrating with electronic healthcare records. So it's really good. I mean, what I had noticed was the top line has been growing very rapidly.
Yeah.
So,
I was looking at that. I mean, what I quite like here is the revenue is almost there, literally not far off one-time sales. Now, if you've got decent margins and you can sort of do a rough estimate, rule of thumb, that's quite good. But the gross margin is good, but they are still operating, loss. They're still making an operating loss here, so they need to sort of cut that down.
Definitely.
But I do like the fact that the top line is growing. And that's the thing; it has a drop through. So you can talk about gross margins stuff.
Fundamentally. I mean, and it's again, we've had the Conservative Party conference. We have the Labour Party conference in full swing. All sorts. The NHS is always, as ever, very, very high up the agenda.
Yeah, I mean,
very surprisingly, very little discussion of sort of digitising it. which is, to me seems to be, where the savings are, where the efficiencies come from.
Yeah.
So, Keir Starmer, if you're listening, have a think about that. And there's lots of brilliant little companies in the UK.
He won't be listening now. I think he's talking, isn't he? Right this moment.
Is he talking right this moment? He's wasting his time.
Yeah, exactly. Keir, taking stockers on at 12 p.m.
Sign up, subscribe.
I know. So development costs. So they obviously developed something here. They've gone up massively. This is on their income statement. So you see, top line has gone up, but again, that's gone up. Development costs has gone up a lot. That's why they're making a loss from operation. In fact, that was an impairment there. So the one, but the development costs still gone up. And the little concern is that they got 4.2 million of cash, and like I said, where is it?
You go 2.8 used in operating activities.
Yeah. Oh, okay.
But another 827,000 used in investing activities. So yeah.
Another chart there that you see a complete downtrend, so that the market not believing this. But I do like companies who've been going down for ages. I remember talking to this company a while back. I did quite like them, but I did think at the time you're burning a bit of cash there. But that's all you need to do is cut down. If they've developed that product, that's the thing. That's what software is, whatever it is. If they've developed it, then that development cost will come down massively. just drop off. That's what we're hoping for. And if revenue continues to grow, then those margins will drop through.
Precisely.
But, yeah.
Problem solving is a problem solving company.
Yeah.
It potentially, when it hits critical mass, when it hits scale, has the operational gearing, the operational leverage will start to show through. And the NHS is very hard to work with. So once you're in, you're in. And if you're a new company trying to get into the NHS, it's very, very hard. So lots of barriers to entry. So, you're right. Folks, look at the cash and has it got enough to get where it needs to be? But in terms of where it could go, massive potential these NHS companies, because there is such a big problem to solve.
Yeah. Matthew says Robert Walters, recession obviously there. We'll look at that in a minute. Super Mono says, so Metro Bank now majority owned by a Colombian billionaire. No red flags there then. You wonder, how do you make your money? What's the biggest industry in Colombia apart from cocoa plants?
I think Colombia's changed since those days.
About commodities, Capital Limited in mining services looks cheap. IC covered them in January. Yeah, I did look at them.
Who, sorry?
Capital Limited. I think, did we just look at those? No.
It's a Capital Metals.
I did look at Capital. Haven't they got a bit of debt, I think? CAPD, again, it's charts don't become too pretty, but again, it's a bit of support there. We just took the chart here. Sorry, I thought I was sharing the screen. It's rolled over and coming down. And I did look at those. It's all in dollars, I know, but 153 million. Let's have a quick look. New contracts, H1 results. Oh, I can't. Look at that the other day.
Let's have a look. I don't know who. Maybe it was Simon Thompson that covered it in the IC. He's generally, he's a deep value investor. So
revenue there, EBITDA 19 million, EBITDA net profit 42 million.
Yeah,
this is for the full year, is it? Yeah, full year.
Has the look of a Simon Thompson.
Yeah,
Ben Graham type stock, a bargain share. So I'll have a look at that. I'm
sure I covered these on a thing. Let me just scroll down quickly. Loans and borrowings, right, 56 million there on the thing, but with the liabilities, total liabilities 147 million. What's total assets there? Total, it's not too bad. Total assets 187, and 69. With the current liabilities. No, it's fine. Yeah, they're fine. They're not. Doesn't seem to be any problem. No, it is cheap. But I mean, where are they based? Is it like It depends exactly where they're based. They got a contract in Nevada. They're all over the place, are they? I suppose. Anyway, I don't know. It depends where they're based.
Picks and shovels. Yeah, picks and shovels. Remember?
Yeah.
Wherever it likes. It's in demand, especially.
The group's corporate headquarters are in the United Kingdom, and it's established operations in Côte d'Ivoire, Canada, Democratic Republic of Congo, Egypt, Gabon. See, when you're in sort of areas like that, you tend to get a decent rating, don't you? The evaluation tends to be paid down a bit due to the jurisdiction risk a little bit.
Just remember his balance sheet. I mean, I make the net borrowings 60 odd million. It's not shockingly bad. Yeah, I mean, looks interesting.
Saying that though, I mean, you know what? That is again a China play. If China starts stimulating, expect that to rally again. I mean, it's since 2019, it's decent uptrend there. It's quite volatile, but if China starts to stimulate, then commodities start to rally. Then, of course, more people want to do some mining, and their services will be required more. So,
Robert Walters. I've just noticed Robert Walters. They're if you look at the RNS list, they're quite keen to tell us that it's been a resilient performance, all in capital letters. They're just shouting about it.
Yeah, I hate that when the companies do that, shouting stuff. They just say, or is the person writing the RNS, does he understand the caps lock is on? Oh, I can't say. Where's it go? Robert Walters. I always find it odd why it's called Robert
Resilient
Walters.
Performance.
Yeah, look at that. Resilient performance. Are you listening? Are you? Because the market isn't listening. Right, we're going to shout it.
The market did seem to think so, because the shares were up 6 and a bit percent.
Okay.
So I guess it's a bit more resilient than they're expecting, although, it's sort of at a headline level, there's a lot of red ink there.
Well, it's all in brackets.
It's all going backwards.
It's down international, down 22%. Is that resilient? Is it? It seems to me that they've overstated that a little bit.
Maybe I guess the expectation was that it would be worse.
Yeah.
But I would avoid recruiters at the moment.
Yeah. Group strategic core remains strong. We are focused on consultant productivity, cost discipline, and long-term investments in our people and global influence. Yeah. Okay. Here we are. The group is well positioned to swiftly capture opportunities when there is an upturn in the market confidence, and our expectations for the full year remain unchanged. Okay, that's why it's
I guess the expectation was that it was going to get worse, but it didn't. So
I'm not joking. So many opportunities in this market. Look at every chart we look at. There's been hardly any charts in an uptrend. This isn't a downtrend, but to me, this smacks of when this turns again, there is opportunity amongst employers or recruitment consultants, all that stuff. Jobs market. Who's the biggest one? Is it Page or? Pagegroup,
I don't know which one's the biggest in the UK.
Pagegroup is quite. I think that they're. Like I said, they've come off a cliff, and they see bottoming out. These are now. This is why I'm quite optimistic about a good year. Okay, Zotefoams. What else is it? Capital. You missed the market call results wrong. Up 143.21. What's that?
Pardon?
Which one's this? The market called the results wrong. Up 143 plus 21%. Shares have been on the slide, but results come in a consensus in difficult markets, so showing resilience. Yeah, PRU looking fairly safe, especially if there's a Chinese stimulus. They are heavily invested in Asia. Okay.
Who? Sorry,
PRU.
Oh right, yeah.
Prudential. Prudential. Yeah.
Yeah, but it's. They all got a bit of a boost the other day when there was that Aviva takeover speculation as well. But yeah.
Okay. Prudential. Let's have a look at Prudential. It's just screen. Yeah, look at that. Pretty much, lows pretty much there. So many opportunities in the market. So many.
Yeah.
What else is on the front page of Vox? Sorry, we're a bit late in this. Ensilica, they're chips, aren't they?
Yeah, nice company. This. It's made the results after IPO. Slightly ahead of expectations. It basically makes customer specific semiconductors.
Yeah.
For industrial applications, and it's really focused on 4 areas. I think it's automotive, industrial, healthcare, and satellite communications. And yeah, it's really paying off. It's some serious top line growth there. EPS well ahead of expectations. And some really nice big wins and a nice order book at record levels. So
go on. A while back, I was looking at these chip designers, and I was looking at a couple like Paul Hill took Sondrel. I looked at these because in a similar sort of market cap at the time they were, but I also held a couple of shares in Alpha Wave, which is a lot bigger, faster growing. I got out of that luckily because I looked at the chart, it broke resistance. I'll show you where. But then I thought out of this and Sondrel, I preferred this one, but they are very lumpy contracts for small chip designers. They're quite lumpy, and the margins aren't that huge. So
that's true. But the more, so it does consultancy services, which obviously come at a lower margin because they're people centric. But the more of its own IP that it develops, the more it can sell with, again, that's that operational gearing effect comes through. You develop a chip platform, and that can be sold to multiple customers rather than chips developed for single customers. So there's a lot of money being invested in IP there. So that sort of helps it with going up the value chain, producing these higher margin bits of intellectual property. There's a very big contracts delivered over multiple years as well. It sort of smooths out the profile a little bit. And chips are becoming increasingly sort of again matters of national security. Securing your chip supplies for industry, and Ensilica has been working with the UK government on that. So nice. Britain is someone said to me the other day there would be no iPhone without British chip companies. You had all sorts of incredible British intellectual property in there. Imagination Technologies, ARM, all sorts, and Ensilica is following in their footsteps. It's not an industry that's been not been without its difficulties, but it's got a lot of learnings from the past of the industry, and it's motoring along here. They
announced a tape out there from a production revenues estimated worth 13 million over 7 years. On that today's thing. Anything else covered? Crimson Tide, educational deals, increases government contracts.
Those education deals, it seems to be developing quite a nice niche in contract catering for education establishments.
What is have they had a consolidation of?
They did, they did, which I think was a very sensible move. But really sort of going to use this sort of enterprise. It's an app that helps interface with enterprise resource planning to manage buildings. It's sort of connecting to the Internet of Things is a big strategic push of theirs. And in this case, it's in sort of delivering school meals, and it's one of quite a few contracts there. These are 10% of the UK schools. I think it's 10% of the UK schools now that it's in.
Do they?
I think it's quite. Hang on a minute, I'll have to check that. Let me just check that.
What's this, John? On this thing,
it's a map. That is a map of
exciting there.
It's a very exciting map.
Geospatial management software and solutions. One spatial. What does that mean?
Well, so there are all these sort of assets that exist in the ground and in buildings around various countries, and in this case, this is a water system map. They basically, they're an expert in geospatial data, and they work with governments and they work with utilities, mapping agencies like the Ordnance Survey, and what they do is basically keep that data fresh and clean and easy to access, so that when say a water utility wants to dig up a road, they've got access to the most up-to-date data and the most accurate data. That means that they can minimize disruption. And as we all know, nobody likes to be stuck in a traffic jam when roadworks are taking place.
No, it's like a crocodile there. Look. Yeah.
Oh yeah. How lovely. Bye. It's nice, cool. Nice company.
Yeah, there's a tiny little one here. I'm sure it's fallen off a cliff recently, because I'm sure it wasn't this small before. Which image scan holders, one of the biggest risers today. It's a micro cap, in a nano cap. Sorry, trading update. They expect to report strong sales and profit growth for the year. So 3 million market cap, profit growth, revenue expected to be 3 million, an increase of 50%, and pre-tax profit of 100 grand. The board is very pleased and encouraged. So, and I'm sure the restructuring costs. The company closed the year with close to $1 million. In fact, their cash has gone up close to $1 million. Did they raise any? Because no, they haven't raised any money. So they're actually making money, which is unusual for a company that small. IGE, but again, what scale do they have? Image scan holdings. Yeah, it's a bit messy, that chart. They've come down from you can see lack of liquidity is quite bitty, but nevertheless, it's
I don't know much about the company, I'm afraid.
No.
I do know that you have some very large players in this market. So my question here would be, what do they do that someone like Smiths doesn't do? Big industrial engineering group, has big detection business. What do they do that Smiths doesn't do? What means that they have what problem are they solving that Smiths is not, or other big competitors are not, and what therefore is its differentiating point against those bigger players. I don't know the answer to that.
Good point. Yes. By the way, someone did say about growth we're talking about. What I'd like to hear from the XP factories here from the recent interviews, now they have grown a lot recently. They are focusing on turning that, making the business running well. Yeah, I mean, it's a year for XP factories, year of opening, boom battle bars of 27 a year, something ridiculous. But now that's in sunk cost. They did that without having to raise any money there, apart from the acquisition they raised money for. But now they are going to start generating cash now. And I do think, it's one of those companies being lumped in with the wider leisure sector when it's not. It's a new leisure area, whereas competitive gaming and all that stuff, it's a bit different from what's out there, but it is lumped in with that sort of area.
I think that last point is a very good one, because companies that sort of, companies should always be looking to growth, but at the same time, growth without profit is utterly pointless, and it should always be an ongoing process. You're always looking for growth, always seeking to improve the business's efficiency operationally. So I'm not sure one follows the other.
No, but thing, and you know what? The thing is, they will have growth, but they won't have obviously they still have like for like growth. But I mean, of course, they went from like 7 million to like 21 million because of they got a bigger estates. But most of those sites weren't even open towards the back end of their financial year, so that will come into the play now this year. And of course, you had train strikes and all that going on. But no, they still have growth. But this time it'll drop through the bottom line. But in fact, I think it's Buffett says no such thing as a growth or value company. A company should have a bit of both. Should have growth and value. So,
I agree. I think if you we talked about this the other day. If you kind of pigeonhole yourself as one type of investor or another, you're missing out on all sorts of stuff, and also companies sort of swing between the two.
A couple of business updates like you mentioned earlier. You said UK grocery inflation eases to its lowest level in 2022. That sounds good. Then you look at it. Market research Kantar said annual grocery inflation was 11% in the 4 weeks to the 1st of October, down from 12.2. Still quite high, isn't it? It's like, it's still 11%, but at least it's coming down. Like I said, at least it's going in the right direction. UK consumers hunkered down as fuel prices climb, but said that apparently it grew. The British Retail Consortium said total sales at chain stores grew by 2.7% compared to September, which is 4.1%. But separate data from Barclays showed the pace of annual growth in the amount of money spent on credit card and debit cards increased by 4.2%, and this was basically down to the rise in motor fuel, petrol.
Filling up their cars on the Never.
And finally, look at this. China exposed European stocks rise after a report of new stimulus. It's a report by Bloomberg. And Stephanie Ekolo, she said, it's absolutely driving the price. And they said, when China sneezes, the world catches a cold. I thought, don't we know
it was America?
No, but COVID. Exactly.
How unfortunate.
You don't want to catch COVID again, is what you're saying.
An unfortunate turn of phrase.
Pretending they didn't know anything about it. What, really? It's come from one of our cities? Really? Yes. Always really. And a couple of people suffer with it. Really? Yeah, okay. Marvelous stuff. Don't forget, hit that like if you like this content and share it and download the free. Did I tell you it's free? Free Vox Markets app. It's ridiculous how it's free, actually. It is ridiculous how it's free. Because I'd really miss it if I'd pay for it basically. I'm sure I'd get it for free if I'm working, with Voxer. But it's cracking.
I must admit, I tend towards the filters. I like the site RNS. Yeah, well, I do most of the work at the desk. So
here we are. There's all the filters there.
I love the filters.
Yeah. So check that out. Don't download the app. Give it a try and let us know if you've not used it before. But hit that subscribe button if you could. Cheers. Thanks very much. Speak tomorrow. Cheers on. Bye.